Hi guys, it's Stock Curry, and over the past 5 weeks, the market has been trading flat as we all get ready for the biggest companies in the world to report earnings this week. In today's video, I'll tell you who's reporting and what you can expect, so let's get into it! Tuesday before the open, we've got UPS, General Motors, Coca-Cola, Cleveland-Cliffs, General Electric, Valera, 3M, JetBlue, and Raytheon. Now, these Tuesday morning earnings are just going to be a preview for what's to come. Now, UPS might move the market a little bit, but really, I would not be surprised to see the market trade flat on Tuesday, getting ready for what's going to happen after the close. After the close, we have Microsoft and Alphabet, which is Google, along with Visa, Chipotle, and Spotify. Now, Microsoft and Alphabet are going to be huge. These two companies are number 3 and number 4 in the S&P and NASDAQ indices. These will be major market movers on Wednesday. So what's going to happen going into these? Well, both of these companies were down significantly over the past few months, and they have risen a little bit going into earnings Tuesday after the close. But it's important to understand that expectations for earnings right now are extremely low. Now, if these companies beat earnings, does that mean the stocks are going to rise? Well, no, not necessarily. We've already seen companies like Snapchat and Tesla beat earnings and yet fall after earnings. This is one of those weird earnings seasons where good earnings are not causing stock prices to rise. Now, we have seen the market go up on Friday of last week and Monday of this week. However, that was not due to earnings. That was mostly due to the technicals. That said, the S&P 500, as well as the NASDAQ, and some major stocks such as Amazon and Apple, they all hit major resistance levels on Monday, meaning it's very possible we may have seen the high of the week on Monday until these companies start reporting earnings. So again, I do expect Tuesday to be fairly flat as everybody holds their breath to see what Microsoft and Alphabet, that's Google, are going to say. Now, Microsoft is a lot like Amazon, in which they do have some retail sales. We know computer sales are down. Computer sales are down across the board. However, Microsoft also has a lot of sales with their operating systems, but more importantly with their servers and their Azure cloud services. So on the business side, that's the great unknown. We don't really know what's happening on the cloud service side. And whatever Microsoft reports for the cloud reporting side of their business, that's going to weigh very heavily on what we can expect for Amazon's earnings that are coming up later in the week. And I'll talk about those in 1 minute. Let's talk about Alphabet real fast. So Alphabet is a pretty big conglomerate. They have a lot of business areas, but by far and large, their number one income producer is advertising from YouTube, Google search, and places like that. Now, the problem is we've already heard other companies report, such as Snapchat, that advertising is tanking. Companies are doing major cutbacks when it comes to advertising. So we do expect Alphabet earnings to be really bad. The question really is going to come down to what are they going to forecast for Q4? Because we already know advertising is going down. Question we don't know, though, is does Alphabet expect advertising to continue to go down? And then the other unknown is, are some of the other product lines in Alphabet's mix going to make up for that loss in advertising revenue? Keep in mind that expectations are extremely low. So it's very possible for Alphabet to beat earnings expectations and still have a terrible quarter. And if you like to play Visa, I do expect Visa to have a pretty good beat after Bank of America, JP Morgan, Chase, and American Express all reported great earnings off of credit card revenues. We know that people are using credit cards more and more and more, and this should be good for Visa. Now, the one downside about Visa, though, is American Express had a blowout quarter. They beat earnings expectations, and the American Express stock fell 3% the day after they reported earnings. So when it comes to Visa, even though I do expect them to beat earnings, that does not necessarily mean the stock is going to go up. It could fall just like American Express's stock did. Now, Wednesday before the open, we've got Boeing, Waste Management, Bristol Myers, Kraft, Hilton, Hess. But again, these are all going to be overshadowed by what's happening after the close. After the close on Wednesday, we have Meta and Ford. And the big one here is going to be Meta. Now, Meta used to be one of the FANG stocks. Now, Facebook is Meta. Meta's stock is down significantly over the past year. In fact, Meta, believe it or not, is at a price that it has not been at in 6 years. 5 years of gains have been wiped out in the past year on Meta. With Meta now trading at a 6-year low, the question is all of the bad news already priced in, or is it possible for Meta to come out and say something that makes the stock price go down even more? We don't know. This is crazy to have Meta going into earnings trading as low as it is. It's one of the worst hit stocks this year. Now, we do know when it comes to Meta that they've had a lot of problems. They put a lot of money into their Metaverse, which turned out to be a huge flop so far. And Meta has since cut back significantly on their funding and investments into the Metaverse. Now, when it comes to the Facebook side of the business, obviously they get most of their revenue from advertising. We already know that Snapchat got killed in advertising. In fact, Snapchat stock was down 30% after reporting earnings. It's possible we could see Meta drop 30% as well. We know that Apple's changes in their security absolutely killed Snapchat's ability to make money from advertising. And I expect we're going to see the exact same thing from Meta. The question again is, how bad will earnings be? We know they're going to be bad. The question is how bad? How bad has their advertising business dropped? How much money did they lose? That's the big question when it comes to Meta. And this could be one of the stocks where we could see up to a 30% move after hours. If they get clobbered like Snapchat did, we could see Meta stock tank. I don't see a lot of hope for Meta to rise after earnings outside of a surprise revenue or earnings beat somehow, some way. It looks really bad for Meta. Thursday before the open, we've got Shopify, McDonald's, Caterpillar, Southwest, and MasterCard. Now, those are all really big earnings. And once again, they will be overshadowed by what's being reported Thursday after the close. But Shopify is the one that you're really going to want to keep an eye on. The reason for that is because Shopify is going to give us great insight into what Amazon might report on their retail side of the business. So Shopify and Amazon are very, very similar. You're talking about the two largest e-commerce platforms in the world. And whatever Shopify reports usually gives us really good insight into what Amazon might report for their e-commerce side of the house. I already talked last week about how Whirlpool reported sales were down tremendously. That's not looking too good for Amazon and Shopify. I do expect them to struggle with online sales just like they did last quarter. However, we could see a surprise. Don't forget that these companies have raised their prices recently. So this might be one of those situations where even though the number of customers has gone down, the revenue has still gone up due to the pricing power that remains because of inflation. Now, all of that said, everything is going to come down to Thursday after the close because we have Apple and Amazon reporting as well as Intel. Now, Intel is going to be important if you're invested in the stock. They have not been doing well lately. They're behind on their technology. It's not looking good for Intel. Now, when it comes to Apple and Amazon, you've got to understand these two companies combined make up 15% of the NASDAQ and collectively almost 10% of the S&P. These are two of the largest companies in the world. And when you combine Microsoft, Alphabet, Apple, and Amazon all together, we're talking about 30% of the NASDAQ reporting earnings this week. 30% of the entire NASDAQ reporting earnings this week in a 2-day period. That is massive. Now, specifically looking at Apple, Apple is difficult to predict. On one hand, we know that they've already cut production of their iPhone 14 just 2 weeks after releasing it. We know that Apple sales are down. We know that they've been hurt by this global recession. We know that they've been hurt by the shutdowns in China. We don't know how bad they've been hurt. Apple is one of those companies where expectations are quite low for earnings, and they could very easily beat earnings and they could very easily miss earnings. There's no telling what Apple is going to do if they're going to beat or miss earnings. The one thing that does concern me a little bit about Apple as far as how the share price might react is the fact that Apple's currently trading at a PE of 25. And Apple stock is still trading near all-time highs. Now, a PE of 25 is very reasonable if we were in a nice bull market with high multiples. We're not. The multiples currently are trading at around 16, so an average PE ratio of 16. Apple has a PE ratio of 25. If Apple's going to maintain that 25 PE ratio, they're going to have to show that growth is being maintained. If Apple shows that their growth is declining, especially revenue, then we could see Apple stock fall pretty hard. Apple is one of those stocks where revenue is going to be far more important than earnings. So even if Apple has an earnings beat, if they miss on revenue, that could cause the stock to go down. On the flip side, if Apple beats on revenue and misses on earnings, we could see the stock go up. And there's just no telling. Their expectations are so low, they might beat, they might miss. I don't know. That one's kind of a gamble. Now, when it comes to Amazon, this is one that we have a little bit of insight into, but not a lot of insight into. Amazon has got a pretty wide variety of business income. Now, part of that business income is the retail side with Amazon.com, where you would go shopping. And then part of that is their AWS, or Amazon Web Services, their server side of the business. The server side of the business we'll get a little bit more insight into when Microsoft report earnings on Tuesday. And the retail side of the business we'll get a little bit more insight into when Shopify reports earnings Thursday morning. So we're not really going to have good insight into how Amazon might perform until Thursday morning when Shopify actually reports their results. So still too early to make any sort of guesses or predictions on Amazon, but we should have a better idea later into the week. And then finally, we finish off the week Friday before the open with some gasoline stocks, including ExxonMobil and Chevron. Now, both of these stocks should see some pretty significant declines in revenue since oil and gas prices have come down significantly over the past quarter. I would not be surprised to see a huge drop in earnings and revenue for both of these companies. But I think what's going to come down for these two companies is really going to be forward guidance. We're already seeing oil prices start to rise a little. We're seeing gasoline prices start to rise. We know that the U.S. still has to refill its strategic petroleum reserves. So it's going to be very interesting to see what their forward guidance is. I don't think their actual Q3 earnings are going to matter. I think their forward guidance is going to determine if the stocks go up or down. So we'll have to see what happens there. All in all, there are huge unknowns. This week is going to be very, very volatile for stocks and the overall market indices, with over 30% of the S&P and NASDAQ reporting. So we can see a lot of volatility, huge swings. We can see the markets go up, down 10%, throughout the week. I have no idea what's going to happen. We have a lot of earnings being reported this week. Once we get through earnings season this week, next week it's all going to come down to the Fed. I know all eyes are on earnings this week, but don't forget the Fed meeting is next week, and that will be the major market mover after the end of this week. So for going all the way through Thursday and after the close Thursday into Friday morning, keep your eye on earnings. But once Friday hits, change gears and start focusing on the Fed and start looking at what people think the Fed is going to do next week. I hope this video helped you out. If you got a lot out of it, be a good friend. Share this video with your friends and family so that they will know what to expect for earnings. And if you really liked it, please hit the like button and subscribe. And if you want to know more about what we can expect in the stock market as far as the fundamentals of the economy, go watch the last video that I uploaded here.